Hello, a very good morning and afternoon to our audience watching us from different parts of the globe. I have the pleasure to moderate this panel. My name is Jamsheed Khadaroo. I work for the Financial Services Commission, which is an integrated regulator for the non-banking sector in Mauritius. We have today three distinguished panelists on my left to share their experience and insights on such an interesting and challenging topic, which is knitting the regulatory framework for sustainable growth of the African economy. Without further ado, I will introduce the panelists. Our first panelist is Mr. Oabile Mabusa. Oabile is the CEO of the Bankers Association of Botswana. Prior to joining the Bankers Association, Oabile served in various capacities at the Bank of Botswana, the country's central bank. He left the central bank as a general manager, whereby he was responsible for supervision and banking operations. Our second panelist is Mr. Elias Omondi. Elias leads the development and implementation of programs to improve the enabling environment for risk markets in Africa at the FSD Africa. Elias previously worked as an actuary at the Insurance Regulatory Authority of Kenya, whereby he has played a key role in the development of risk-based regulations and market innovation initiatives. Our third panelist is Abdelkader Benbrahim. Abdelkader is the partnership coordinator of Making Finance Work for Africa. Until June 2020, Abdelkader was a financial sector advisor leading the Making Finance for Africa's financial inclusion work stream. Prior to joining the Making Finance Work for Africa, he worked for the Global Affairs Canada, supporting its ICT development function and serving the president's and ministers' offices. Thanks again to our speakers and welcome to this session. We look forward to your active participation. Before going any further, some housekeeping rules. We would invite our audience to submit their questions to the panelists in the chat box as we progress with our discussion. These will be addressed during the Q&A part at the end of our session. So we know, just some introductory remarks. We know that the financial services sector has often been seen as playing a crucial role in funding development. The importance of getting the governance of the financial sector right in order to achieve sustainable development had been emphasized in both the Addis Ababa Action Agenda and the 2020 Agenda for Sustainable Development, respectively. Many African countries have made progress in reforming their institutional framework and creating an enabling environment for increased access to financial services. Increased penetration ratios have in fact been observed in several African countries thanks to innovative business models. Nevertheless, many challenges remain. Some recent surveys have estimated that almost 30 out of the 40 most climate vulnerable countries are in Africa. But even though they receive less than 5% of the allocation of the entire global pie of sustainable finance. We have to recognize, therefore, that for financial services to become more available, accessible, affordable, and henceforth inclusive, innovative financial instruments and well-functioning financial infrastructure are needed for the benefits of the poor and other vulnerable groups. With these introductory remarks and context, I would now like to address the first questions to our panelists. You will each have 2 minutes to enlighten our audience with your high-level perspective. So, according to you, how has the African continent coped with the policy and regulatory issues when it comes to the financing of sustainable development goals or agenda so far, and what lies ahead? So maybe we can start with Elias. We'd be pleased to listen to your perspectives, especially if you can enlighten us what's happening on the regulatory side. Elias.
Yeah, thank you. Thank you very much, Jamsheed. And Africa is currently experiencing a tremendous change, particularly on the regulatory side. And one of the key things that I would mention is that we are coming up from a very weak regulatory platform, whereby incidentally, most of the regulations that were developed in the past were not supportive in terms of enabling growth and also enabling more innovative, I would say, solutions to get into the market. But given that Africa is facing a number of challenges, there's a lot of work that has been done in regard to enable those particular regulations to support both what we call very innovative solutions, at the same time really provide and close the protection gap that we are experiencing in Africa. Now, one of the key things that I would mention, if you look at the penetration of financial services and products, it's not great in Africa, but again, what we've seen over the last decade is that we've seen a rise in terms of appreciation and in terms of growth of these particular financial products and solutions and the acceptance of these particular products. And that has just been enabled by creating what I would call a fit for purpose and proportionate regulations across the continent. And that's need to happen. And maybe as FSD Africa, we've worked close with over 28 countries in Africa, and we've developed around 130 regulatory policy and regulatory policy frameworks to support the growth of the financial sector. And this goes a long way in alleviating poverty around Africa, at the same time creating solutions that are going to support Africa towards making it more sustainable and making it basically manage its future risks. Thank you.
Thank you, Elias, for these thought-provoking start comments. I would now turn to Abdelkader. Maybe Abdelkader, I would invite you to further the tone and let us know what's happening on the private sector side, if you can, for the benefits of our audience today.
Thank you very much, Jamsheed. And first of all, let me thank the Mauritius Africa FinTech Hub and the Africa FinTech Network for inviting me. I'm so happy to be here. Let me first start by saying that if the COVID crisis has taught us anything, is that we really need a profound and radical change in the African financial sector to make it more fit for its purpose, and that is to serve the real economy and society. And for me, there are two main roles that the financial sector should be playing. One is, of course, it needs to play a counter-cyclical role, especially in difficult times or in shocks. And of course, we have just witnessed the worst crisis in 80 years. And second is in channeling savings in a cost-effective way. And this is all the more important at a time where Africa needs to transition to a low-carbon and inclusive economy, which will, of course, come at a cost. So on top of that, of course, we've had this major setback because of COVID, which, according to some estimates, the crisis have thrown an additional 30 million people into poverty, and the estimated gap to meet the Sustainable Development Goals is around 2.5 trillion, probably an additional $1 trillion annually per year. So it's an immense challenge. So it's important to set this into context. And I think, from the industry perspective, the banks have largely remained resilient, and that's due to the fact that many banks were well capitalized before the crisis. We've seen policymakers take proactive measures in maintaining financial stability and soundness. The MFIs, the microfinance institutions as well, have avoided a liquidity crisis because of their resilience, and they've also received some kind of support from policymakers. But I think those that were worst hit were the small and medium-sized enterprises, the SMEs, and there's a lot of evidence to suggest that. Of course, they've seen a huge drop in revenues during the crisis, and there's also structural barriers that existed before the pandemic. So I think this is where really policymakers and regulators will need to be very cautious and play an important role in addressing the financing gap for SMEs.
Abdelkader, for these valuable insights. Maybe I'll ask Oabile just to kind of supplement based on his experience on this first question. Floor is yours, Oabile.
Thank you, Jamsheed, and appreciation to the Africa FinTech Festival for the occasion. My thoughts on this are that if you look at developments, you realize that for a foreseeable period, in the past, regulation in Africa has really been reactive, responding to global changes and innovations. And this includes the drive that you've seen around global warming and the move towards recognizing green investment as a topical issue, and the need to raise the level of raise the bar in terms of sensitivity to ecological projects that are ecologically friendly. And in that respect, although Africa is really more reactive, you see that in terms of impact, we are actually worse off in terms of the effect of global changes on Africa. And what this has done is sort of drive regulation more in the direction of pushing more towards a gradual, deliberate change in risk management practices and project evaluation practices to make sure that Africa does the best it can to make sure that it doesn't negatively, finance doesn't have a negative impact on the environment. And herein comes the issue about financial inclusion. This drive, this agenda in terms of impact has a bearing on financial inclusion, because you've seen innovations around green investment, which African regulators must get into. My two colleagues have mentioned the challenge of COVID-19 and the pressure that it has put on fiscal budgets. It will not be easy in those environments for regulators to be able to put in place innovations, or for that matter, governments to be able to embark on sustained investments that will be able to include the marginalized people out there. And green investment and the associated financial architecture will certainly help towards generating financial inclusion-friendly kinds of projects.
Thank you, Oabile, for these wonderful insights. And I believe that the speakers have really made the emphasis on the challenging and testing times that we are faced, even as regulators and policymakers. You had mentioned about the regulatory gaps which needs to be fulfilled, Elias. And I believe that though Africa has made considerable progress, we still have a lot of fragmentations that we are observing in practice. And moreover, what I would like to add is in terms of the cross-collaboration amongst African countries when it comes to the promotion or to to encourage participation of fintech companies. Why I'm stressing on this issue is like really today it's a fintech event, and we would like to know, given the context of this broad macroeconomic, including pandemic challenges. So, can you just, in a nutshell, each one of you can just very briefly tell us some of the most recent initiatives that have been taken place at the level of your institution to support sustainable financial markets. For that question, may I start with yourself, Oabile? What have been the initiatives from the Botswana Bankers Association recently?
Thank you, Jamsheed. The Bankers Association is just an association, a lobby and advocacy association for the banking industry. We work with regulators and have been trying to make. For the most part, regulation in my country does not curtail innovation. Regulators even allow very nascent emerging fintech companies to come in and introduce payment services that affect both government, public sector, and the banking system, as well as in the mobile space, without necessarily shutting them out because of the absence of available rules and regulations, legislations that would guide their operations. And this has remained so, but I think there's still a greater challenge that we don't have a deliberate mechanism under which a regulation can be open and encouraging to fintech developments.
I think we are all facing those challenges in recent years. I will now be pleased to turn to Abdelkader. You can just elaborate a little bit on the initiatives that you would like to share for our audience.
Thank you very much, Jamsheed. And just to give a little bit of context for those not familiar with Making Finance, we are a multi-donor initiative that is hosted at the African Development Bank. And so we pride ourselves in being a market facilitator and a critical resource to industry players. So given our role, I think I have time to talk about one initiative. One is related to the work we're doing with the central banks. And, just to follow up again to what Mr. Mabusa said, we're also sort of working specifically on strengthening supervision of fintech in Africa. And what we have seen with the rise of fintech and digital financial services is some of the biggest challenges that supervisors face is to move in quickly and provide up-to-date solutions. And also at the same time to have a deep understanding of their new and complex realities in their jurisdictions. And what we're finding that while many central banks do have regulatory frameworks, the challenge really lies in implementing regulation enforcement while maintaining the principles of proportionality. And so we're working with the Association of African Central Banks to build supervisory capacity through training programs, exchange of experiences, and trying to equip supervisors with the tools for supervising fintech. So this is one of the initiatives that is probably directly related to this event.
Very fascinating and challenging assignment. And Elias, over to you. Maybe you can just tell us what is happening on your space, on FSD Africa space.
Thank you very much. As FSD Africa, we work alongside governments. We work alongside financial firms, investors, and other stakeholders, basically to fix the deep-rooted market failures. And maybe just to mention, case studies make an argument that to be effective in financial development, we need to cover the entire financial system. And what we've done as FSD Africa, we appreciate that we need to finance for the poverty alleviation, but also finance for the poor. And what we've done over the last couple of years, between 2014 and 2018, FSD Africa did partner with Women Banking, World Banking, to support major banks in providing financial services that were highly targeted to women. And in this program, we managed to create savings accounts for over 600,000 women across Africa. And that basically shows the reason why such particular programs need to happen, because we need to ensure that people are able to save, particularly in societies, and also ensuring that these particular programs are provided through digital channels. Now, looking forward is that we are highly focusing into green finance and also digital economy. And what we are currently doing is trying to ensure that, given that Africa is in a very precarious position, we need to ensure that Africa is ready to invest in green finances, at the same time support the digital ecosystem. Now, another program that we've launched within the innovation. Recently, we initiated a program called the Bima Lab that looks into creating a platform for innovators across Kenya. And this is a program that we intend to have it go across Africa, whereby we are harnessing innovators. We are enabling them to connect with the right partnerships. We are connecting them to the regulators to understand what products they are creating, and also enabling regulators to understand what is coming their way. Because as Mabusa did mention, regulations have been quite reactive, but now we need to make them proactive, we need to make them responsive, and we need to make them work for the different countries that we are working in. Thank you.
Thank you so much for these wonderful insights to all of you. I'm sure that our audience will be looking forward to see many more initiatives that will be implemented in the months or years to come by your institutions. So as we are focusing on innovation, and some of you have already mentioned the critical importance of driving forward innovation, whilst doing so, I believe it results in a fine balancing act. We cannot move forward with like looking exclusively at innovation. All innovations come up with their own distinct and separate types of risk. So this leads me to my next question. So do you believe that the implementation of new and innovative financial technologies would further assist African countries to meet their sustainable financing and financial inclusion goals? I believe you have, to a large extent, already covered that. But as a follow-up question, I would be interested to know, in fact, are there any special risks to financial technologies which would require consideration by the African countries in their urge to establish a robust, adaptable, and financially inclusive regulatory framework for sustainable financial markets in Africa? What has been the experience of countries with which you are familiar? So can I ask Elias, if you can, broadly speaking, I know time is very limited and it's a subject which we can talk on for hours, but in a nutshell, what according to yourselves are the important risks that we need to address?
Definitely, technology comes with risks, and what we need to balance and weigh out is the pro and cons, because we need to look at the challenges that are already in Africa and try and manage those particular risks. And one of the things that regulators have been grappling with is issues of consumer protection, issues of data protection. And what we've seen is that various regulations are coming up in terms of protecting the data. We've seen what we talk about customer outcome-based initiatives being created, because as long as we are providing value to these customers, are they also getting the experiential value? What experience are they getting out of all these particular services? The second thing is that with technology, there is lack of that human involvement. How do we ensure that we still ensure that these particular customers get the necessary interaction when they are consuming these particular services? So over and above that, we've seen also the risk of exclusion in terms of technology. There's some areas that might not really be able to use the technology that might come in other particular areas. There's some people that might be excluded, even though we are pushing around the inclusion agenda. Some technologies might, in a way, also exclude some other customers. So how then do we address all these challenges and risks that come? But what maybe I want to stress out, we need to give ourselves an opportunity, and we need to weigh and balance out between the pro and cons, and manage ways in which these particular challenges and risks can be managed in a better way. Because for each and every opportunity, we must be able to get a risk that basically comes in with that particular opportunity. So my urge is that, yes, we need to continually appreciate and adopt these particular technologies. But in the meantime, we need also to see how then we minimize and manage the risks that might come with these technologies. Thank you.
Very sweet and very insightful from your perspective, Elias. Maybe I will now over to Abdelkader. If you have any experience of recent projects, FinTech related, of course, which needs to be communicated or to be emphasized. Over to you.
Yeah, thank you, Jamsheed. I think maybe first to answer the question on risks, and Elias did cover a lot of it. And if you look at the rise of FinTech, that brings with it a lot of macro financial risks due to changing market structures and risk-taking initiatives for financial institutions. A lot of the fintechs offer innovative and alternative financial products and services, such as peer-to-peer lending, or if you look at the credit scoring models, that is based on alternative data. Oftentimes these in Africa, they exist outside of the existing regulation. And I think we heard earlier today in the panel about, there's no regulation in place for alternative finance in many countries. For example, only 33 countries have legislation on electronic transactions. 25 countries have legislation on consumer protection and data protection and privacy. So there is that risk. But I think, another risk that is not really talked about a lot is the growing digital divide. And I think that with digital finance and digital economy, we have seen, of course, over the past years, how it has been a way to buffer individuals, and the COVID crisis has really articulated that quite well. And we've seen an acceleration in digitization. But I think also that a lot of people, do not have that bandwidth, to be able to digitize or to be able to use this digital technology. So I think there is that risk as well of further increasing the digital divide, and it's important that regulators take that into account through digital literacy and so forth. And of course, there's operational risks, which is inherent in IT and digital finance, like cybersecurity or IT failures. We've just seen, one of the biggest empires, Facebook, and going into a 6-hour offline. So, of course, if something like that can happen to Facebook, FinTech, that can happen as well. So we need to be very cognizant of that. And there's lots of examples really that technologies are managing that risks very well. And FinTech, in my experience, I've seen smallholder farmers now who are able to access financial services, to buy seeds and improve their crop yields. SMEs generating data digitally to be able to access loans and grow their business. So yes, there's been a lot of examples everywhere, but of course it's the fine balance of enabling innovation and managing the risks.
Thank you very much for these impressive observations. Very thought-provoking indeed, Abdelkader. I will now turn to Oabile. Oabile, if you can add from your perspectives in Botswana or within the network that you have been discussing recently on this particular question. Over to you.
Oh, thank you. The adoption of FinTech certainly has benefits and widespread benefits. My colleagues have mentioned many of those. But the benefits include ability to extend financial services to the unbanked because of the low cost and high penetration capability of IT. Fintechs are able to facilitate improved access to financial services, whether done by mainstream banks or other players in industry. The wider economic impact of that, of the adoption of fintech, really has led to more or less a enablement of the wider populace, because the more you have increased financial transactions reaching more people, they are able to participate more meaningfully in the in economic transactions. So one could really say fintech has made financial services more accessible, more universal, and has high potential of even exponentiating those kinds of enablement. But yes, there are risks, as colleagues have indicated. One of the big risks that I can identify concerns regulators, and it's a knowledge risk. Regulators are not able to cope with and keep abreast with the level of innovation and change in fintech, and they'll always be on the back foot, thanks to interventions being made by organizations such as Making Finance Work and my other colleague. They will be able to catch up gradually. But other risks also involve the absence of standards guiding the operation of fintechs. It's very important, and this is where regulators come in place. You don't just come into a market and start operating without any rules of play, because there will be a lot of risk. Security risks have been mentioned as well, alongside even alongside other advantages such as the lowering of operational risks for players in financial services that is brought about by fintechs. There are wider risks that have to be mitigated and balanced out.
Thank you, Oabile, for these very, very fascinating views. And maybe I will also take some time to tell you that our institutions in Mauritius have also been very, very active since this year, particularly. We had special subcommittees established cross-institutional on a cross-institutional basis. And this has led to the development, as you have mentioned earlier, Oabile, in dedicated guidelines, regulatory guidelines, which would support and to inform the stakeholders, players, what are the expectations from the regulators and our policymakers. So with this observation, I will now, unfortunately, we have 5 more minutes before we will go offline. So my last question to each one of you is, I would like to know your take on, there is this buzz, which is about cryptocurrencies, decentralized finance. So in your views, how do you see these trends will impact on the future availability of sustainable financial markets for Africa? So let us start with Elias. I know you will have a lot to speak on this, Elias.
Yeah, I think when it comes to cryptocurrency and basically blockchain, Africa must take lead. We've seen different continents taking lead on a number of innovations, and for us to finance a sustainable future in Africa, we have to be part of the game. And ideally, we've seen a lot of work being already done, and governments really setting pace for allowing such particular currencies. So, for instance, a digital currency in Nigeria. Very exciting to see such initiative already coming up in Africa. And yeah, I think Africa is going to play a very big role in some of these new technologies.
And
thank you.
If I can ask you as a follow-up question, I know you've been engaged with regulatory sandboxes in your career experience. How far do you strongly believe that a further collaboration across African countries in terms of their implementation of regulatory sandbox? Do you think this could be a possible outlet to explore additional opportunities?
Yeah, definitely. And for us to really manage the risks and also provide the necessary support, Africa must work together. And ideally, we need to think about the cross-border type of sandboxing across African continent, because some of the risks that are being maybe resolved in Kenya might be similar to what need to be resolved in Uganda. And you might have a solution that is already working so well in Kenya, but due to challenges, then it cannot get its way into the neighboring country. So I think we need to create InsurTech passporting across the continent. We need to start exploring ways new technology would be borderless. And once we enable that to happen, then we will be able to solve a number of challenges that are currently existing. And Mabusa did mention that most of the things with maybe challenges with knowledge. And I believe that already a lot of work is being done to ensure that regulators and policymakers are abreast with ideas and also knowledge on these new innovations. We are basically reducing that gap between the regulator and the innovator, because most of the time, regulators will always run away from the innovations, and also innovators will run away from the regulators. The only thing is that we have to put them close to one another, and that's really what's happening.
Thank you so much, Elias. I will have only one panelist, enough time to take the views of one panelist more. Who wants to jump on this question? Abdelkader, I can see.
I'll be happy to take it on if Mabusa allows.
You will have only 1 minute before we close. Yeah.
Yeah. Okay. So I think the adoption of cryptocurrencies in Africa is still relatively small compared to the rest of the world, but it is a very fast-growing cryptocurrency market. In fact, I think I saw a report that it is the second or third fastest growing region in the world, and there's particularly high adoption of cryptocurrencies at the grassroots level, so at the retail level. And if you look at places like in Nigeria, where the bulk of the adoption is taking place, but also in Kenya, South Africa, and Tanzania, there is a high adoption rate of cryptocurrencies. And there's many reasons for that. In fact, the regulators in many of these countries have taken a very strong stance against cryptocurrencies. The Central Bank of Nigeria recently has ordered banks.
Unfortunately, time is really flying, and I think we have come to the conclusion of this session. Thank you so much, Oabile, Elias, and Abdelkader, for your time and participation. And I think with these last words, I wish you all a good day ahead. Thank you, Oabile.
Thank you. Thank you very much, Jamsheed. All the best.